Good afternoon, traders. I hope that you guys are ready for the next stock market movers with, of course, Money Mitch. I'm here to go ahead and get you guys to the headlines of the day. Also, we go ahead and bring on some expert opinions. Today, we do have an interview on a public company right now. It's a SPAC. Yes, I said it. We'll talk about that opportunity coming on up. That's going to be with CEO of Rezolve, Dan Wagner. So stick around for that, guys. Can't wait to go ahead and dive right into that. That's also with Armada Acquisition Corp. Ticker's AACI. We got another interview also. We got Eric Schiffer, CEO of Los Angeles-based private equity Patriarch Organization. Stick around. We also have the meeting, FOMC. We'll talk about that. Swiss and Bank of England rising the rates. Bitcoin bouncing a little slightly. We'll take a look at Bitcoin, how it's performing in the intraday. Housing market issues still showing up. Revlon, Spotify, and travel stocks are down again, guys. We got a lot to get into. Welcome to it, Money Mitch.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch.
What's going on, traders? How we doing on out there? Definitely got to go ahead and bring the hype on up. You guys let me know what intraday is getting your attention. Is there any catalyst that has really got you stumped, or maybe something you guys want to focus on? Definitely throw it up in the chat. I'll go ahead and see it, and we can definitely cover it today. Welcome to it. The Blind Trader, Blockchain, Beach Bum in the house, and I see Grizzly Bull. If you're new to the show, or maybe this is your first time stopping on a Benzinga show, definitely say hello in the chat so that we can go ahead and recognize you. Let's go diving on into what's going on right now. Let's take a look at the overall market and see where we're at right at this moment. There's a lot on my charts, and sometimes that happens because you guys know I do live trading and I kind of pay attention to the market consistently. Now we're really starting to get a little bit of a bounce here, a little bit of a push. So it looks like we're starting to finally get a little bit of a rally. I thought we could get a relief rally today a little bit. So let's take a look here at the sectors. Right now, consumer defensives is leading us up. So I talked about this with PG, if that could stay strong, I was going to keep on watch stocks like Clorox. Take a look at Clorox, and you can see here how it went back above the VWAP, held the VWAP, starting to make moves on up. So keep this one on watch. You guys can also watch maybe Heinz Kraft. You guys keep it on watch. I think there's going to be a lot moving into this. And of course, people are just looking for ways to kind of find some kind of trade on the upside, right? And so Colgate-Palmolive here, you can take a look. The value trade is on. Consumer defensives doing well today, so keep these on your radar. All right, so another thing, of course, to watch was what happened in the news, right? And so we've been kind of paying attention here, and what changed? So what did we get overnight that really knocked us down? Because that's really when we got knocked down. Let's pay attention here towards the Swiss National Bank here. The Swiss overnight, the Swiss National Bank raised their rates for the first time in 15 years. This is very important because they raised by 0.5 point, and they haven't raised since September 2007. The central bank increased its policy from negative 2.5% to from a 0.75%. So definitely weren't expecting to see this getting mentioned, and that really affected the overall market. That's why we came on in definitely getting hit, but it wasn't only the Swiss National Bank. It was also the Bank of England rising bank rates from 1.25 to 1.0. 1.25 from 1.0. Sorry, I'm just reading it wrong right now. Thursday implemented the 5th consecutive hike rate. So definitely showing that soaring inflation in the UK. The UK soared to a 40-year high. 40-year high. I said it, guys. 9% annually in April. A lot of this coming from what? Wouldn't you know it? Food and energy prices are spiraling. The country faces major cost of living crisis, and the bank expects the inflation to rise over 10% in the Bank of England here. And England's economy unexpectedly shrank by 0.3% in April after a 0.1 contraction in March. This is the first back-to-back declines that we've seen since April and March of 2020 in England. So you guys can see here the Swiss, the Bank of England coming on in here and increasing worries of inflation. Now, to put a little bit at ease out there, Germany coming out today in the afternoon, we got a report from CNBC here. It came from Germany's finance minister. He said that there's no need for any concern. Germany playing down the fears of economic fragmentation here. The yields of several Euro nations rose last week, and after the European Central Bank suggested that it would tighten monetary policy. But it didn't address how some of these nations, and because they're all under here, how are they going to address the highly indebted nations, and how could they address that and the focus there to kind of ease the worry, right? And so this created an unease amongst investors who fear about fragmentation in the region, and it pushed the Italian 10-year bond above the 4% threshold for the first time since 2014. We got to keep our eyes on the situation also worldwide, not only here in the United States. Bitcoin taking a little bit of a rebound here. It wasn't a monstrous rebound, but we're definitely going to keep on watch to see what happens in Bitcoin. I'm going to go ahead and actually let me pull up the Bitcoin chart here. I got it in Benzinga Pro. So let me just get that up right quick. In a little bit, we'll be getting into our interview. So stick around, guys. I'm sure you guys are going to want to hear about this. And one of the things that we like to do is not only get to the experts, but sometimes we're going to go towards the actual interviews of companies. That's what we're going to do today. And then, of course, we'll get to expert opinions later on in the show. Getting my Benzinga Pro on out here so I can show you guys the Bitcoin and take a look. I haven't taken a look at Bitcoin today, so I want to make any assumptions, but that's the way it was setting up this morning. So let's go ahead. Let's take a look here at Bitcoin. Looks like we're down 5.92%, but bouncing off of those 2,000 level that we had in the futures in the after hours. It was around like 5:40 a.m. where we really bottomed out there. I'll show you guys the chart here. Let me go ahead and throw that on up here so you guys can see this. There you guys have it. Here's the Bitcoin chart here that you guys are seeing. This has come down here. You could see how it bottomed out near that 2,000 and bounced a little bit, went up there to 22.8s. Now down there bouncing around 2100s. We'll see if it can get through that level on the downside. I know a lot of concern on out there from cryptocurrency investors. So we'll keep this on watch to see if Bitcoin can break that 20K. I've talked about it where the levels that I'm looking at Bitcoin to come down are somewhere closer towards 9,000 and 10,000. That's where I will be looking to go ahead and dip my toe in some of the cryptocurrencies. But like always, I'm in no rush here because I'm going to be patient and understand that we could be in what's called a crypto winter. If you don't know what that is, go ahead and look it on up. So the blind trader on out there, Beach Bum, appreciate you guys coming on in. Do me the favor, guys, smash the like if you guys enjoy getting the information of the headlines on the day and, of course, getting to more. That's what I want to do right here on this show is keep you guys in the informational edge. All right, going back towards the topics here. We just talked about the Swiss and the Bank of England. We can talk a little bit about the FOMC reaction. You know, some of the things that I think we got to state here are some comments by Powell. He wanted to say here that he's just pretty much trying to lighten it up on the outlook on the Fed here. So I'm going to go ahead and read some comments here. These were comments pretty much on unemployment. So he said, if we were to get inflation on its way down to 2%, unemployment up to 4.1, that's a still historical low. Why is he stating this? So it doesn't seem that bad that they're going to really push here to try to increase there, but with the goal, right, of getting inflation down to that 2%. He said 3.6 is historical low in the last century. So anything, above that, starts getting something that they'll focus on, but they just don't want to see that number go crazy. Of course, that's how they're talking about a soft landing here. And so a 4.1 unemployment rate with inflation well on its way to 2%, I think would be a successful outcome. And this coming from Chairman Jerome Powell here. He also stated that we're not trying to induce a recession now. Let's be clear about that. Just want to go ahead and repeat that. So he's saying that they're not trying to do a recession. He is saying that they are really trying to be restrictive and trying to step up to the plate here on inflation. We know they raised by 0.75 of a point there, 75 basis points. We'll talk a little bit about that coming up when we get into our interview later. We will be jumping on into that at 1:45. We'll talk a little bit more about the inflation and what's going on. And of course, we're going to do that with Eric Schiffer, the CEO of Los Angeles-based private equity firm, the Patriarch Organization. So stick around for that. Up next, let's go ahead. Let's dive into our first interview today. But before we do that, I wanted to kind of show you guys a little bit of a video here to kind of give you guys really a description of what I see from this company. So let me go ahead. I'm going to go ahead and play this up and let me know in the chat if you guys hear it. You guys should hear it here.
Wishbone front and integral link rear suspension provides high standards of handling and ride quality, whilst Adaptive Dynamics optimizes damper settings to maintain rear faces.
What you're seeing here, guys, is the interaction that you guys can be doing with Rezolve. So we'll talk a little bit about this coming up, but I just wanted to give you guys a little bit of a preview so you guys could see it for yourself, how the engagement really happens here in Rezolve. All right, guys, and that is at least a little introduction to Rezolve. Let's go ahead. Let's pull this down. Let's bring on the CEO of Rezolve, Dan Wagner here. And they're also, of course, this is a merging partner with Armada Acquisition Corp. The merger partner and ticker right now is AACI. Let's bring on Dan Wagner. How are we doing today?
I'm doing good. Thank you very much.
Welcome to the show. This is the first time here. This is Stock Market Movers, where we love to touch the headlines and give the informational edge on out there. So let's go ahead. We'll start diving into it. I have the investor presentation, so I will be showing some images from that. But I first want to just get into a simple question of What is Rezolve and how do you generate revenue?
So we created a platform, as I think you could have seen with the video just now, and that platform allows merchants to interact with consumers via their mobile phone. And I come from a long line of commerce. Am I still online here?
Yes, you're still online.
Okay. Sorry, it's just I can't see it on my screen here, so it's a bit. Should I not be watching that? I'll turn that off.
No worries.
So
kind of worry.
Okay, apologies. Me and my team come from a long line of building commerce platforms for retailers and brands. My previous company became the market leader in Europe for enterprise e-commerce, and in the US we ran the e-commerce sites for Neiman Marcus, Lands' End, TJX companies, Under Armour, big retailers. And what we were struggling with was how those retailers are talking to consumers via their mobile phone, because the mobile phone is such an intelligent device. It kind of breaks out from traditional e-commerce into the physical world. And so people call this omni-channel and online to offline commerce and things like that. But fundamentally, it's about merchants being able to talk to consumers wherever they are. And so what Rezolve has done is it's built a platform to do that really efficiently. And we use all the capabilities that the phone has, like the camera to see things, the audio, to hear things, where it's located for proximity-based interaction, so that I can talk to somebody who is maybe 300 yards away from my store and bring them to my store, and things like that. And we've put that all together into a new kind of commerce stack or commerce platform for the mobile phone.
Yeah, definitely. So let's go ahead and let's dive a little bit deeper here. Now, one of the things that I did see is just yesterday, and just to put it out there, guys, just yesterday, you guys released some recent MMA news. Let us know exactly what this news is and why is it important to the strategic step up moving forward?
Yeah, so we're pushing something that's very new into a market that actually badly needs something to help the physical retail environment. And one of the things that you may have seen just now on the video was a guy watching TV, and then his phone woke up while he was watching a car advertisement. His phone woke up and said, "Do you want a test drive?" And he was like, "Yeah, I'll get a test drive." So he was kind of interacting, but his phone was interacting and he was just watching. And what we've done in Germany is we've bought one of the largest radio broadcasters that has 17 major radio stations that talks to millions of consumers every day. And what we're doing is that we are now introducing our technology so that every single ad that's coming through the airwaves, every time a song is played or something, it interacts with the mobile phone of the consumer. And that's kind of trying to change the way in which broadcast media works by allowing it to interact with the consumer, not just through their ears, but through the device that's in their hands.
All right, so I'll go ahead and continue here. Now, one of the things that I did see is Rezolve's revenue model, an agreement for a driven go-to-market strategy. Now, how does this really give Rezolve a competitive advantage over others?
Well, first of all, I don't think there is very many other people doing what we're doing. I mean, we stand alone in the market with a unique proposition that is getting fantastic traction and momentum. We did $66 million in revenue last year, really from a standing start. And we didn't burn hundreds of millions of dollars achieving that. We burnt like $17 million to generate 66. And this year, we're going to do $219 million. That's 250% plus growth year on year. And we're going to do it burning less than $35 million. So in terms of our operating efficiency and our growth, it's really quite impressive. And the reason it's impressive is that we work with partners to reach these merchants around the world, these partners being typically the guys who put in point of sale terminals or card machines into retailers, very big players, but they're looking to try to help those retailers, those physical retailers, reach customers wherever they are. And radio is one of those ways to do it, as is the geolocation stuff that we have. And that's why our ticker symbol will be Zone, Z-O-N-E, when we go live on the NASDAQ following the de-SPAC, because we're all about proximity and we're all about interacting with the mobile device.
Yeah, so one of the things that I saw here, and I'll bring up the presentation to kind of add to it, and you can elaborate on here, is I do see here the current customer engagement journey. And, you know, with current engagement names like StubHub, Uber Eats here, Deliveroo,
Yes.
Grubhub, are these current partners or just more along
No,
examples of
no,
what can you be using here?
no, we're just trying to illustrate the fact that the current engagement from a physical retailer to a consumer is completely broken. It's a
Hmm.
broken system. Okay, I'll give you an example, right?
Of
If I'm
course.
sitting on a bus, and I see an ad for, I don't know, an electric shaver, and I go, you know what? I need an electric shaver. And the advertiser is Best Buy, just say, okay? No one picks up their phone and goes www.bestbuy.com, navigates to personal hygiene, navigates to electrical appliances, and buys the shaver from Best Buy. Nobody does that. We see the ad that Best Buy placed. It stimulated an order from me, right? A transaction, but I open my phone and search Google, and then I end up on Amazon, and then I buy the product somewhere else. And that is totally broken. And with
Ah,
Rezolve, I just pick my phone up and wave it over the ad and tap, and I bought it from Best Buy. There are many examples, the examples of StubHub and stuff. You know, when I used to live in New York, there was a deli like a block and a half away, and I would pick up a normal phone, right, and call the deli and say, I need a tuna melt and a root beer. And they send it to me within 10, 15 minutes. And today, I pick up my phone, I fire up Uber Eats, I order from the same deli. I get the same food from the same deli, but the deli's having to give away 25% of their revenue to somebody like Uber Eats. So they're being destroyed. You know, the market is decimated. And what Rezolve does is it solves that problem. It puts the power back into the hands of the physical merchant to talk directly to a customer via their mobile phone. And we believe wholeheartedly that this is a much needed technology development that the market's been crying out for about a decade and a half. You know, it's like 15 years that nobody's stepped up and said, we're going to help solve this problem so that you can talk to customers directly. And I think that's fundamentally what we're doing. We're on a real mission here.
I love it, Dan. I love how you explain the examples, and I'm just considering it also in my shoes too. And I completely understand there. You know, one of the things, it seems like you're definitely making it easier on the consumer, and also a more direct approach for marketers on out there that are really trying to get you to the product, but without kind of that extra step, like cutting out so many steps in there, and that a lot of times that's where you lose the consumer, is in
Yes.
those steps, like you just explained with the Amazon situation. Next thing you know, we're on Google, we're searching the product, we're getting also advertisers that end up, you know, battling to show up at the top there. And so I think this is a great way to get directly to the products. Sounds truly interesting. I would love to take a little bit deeper dive into the actual app and use it myself.
Yeah.
But going to go ahead and do so, Dan. Let's go ahead. Let's talk a little bit more about the business model, and it includes a winner takes all approach. Tell me
Yes.
how this is a winner takes all opportunity, and how Rezolve will be the one to capture the opportunity.
So first of all, the idea that I can pick up my phone and wave it over an ad and instantly transact, or listen to a radio commercial and it triggers an engagement on my phone. Sort of the understanding there is that there is only one technology doing that. Because if I have multiple technologies doing that, then the consumer is going to get confused. Which technology do I fire up to scan that phone, to scan that ad? I don't want things triggering different things on my phone from different technologies. So the idea that there's more than one doesn't really make a lot of sense. And all the great technology initiatives that have changed the market, like the PC industry, was powered by a standard which was made up of the Microsoft and Intel partnership. And the same was true with the home recording industry, which was made up from the VHS as a standard recording format, so that the movie studios could, print to one format, and the manufacturers could create video recording machines to a standard format. And we believe the same is true here. What needs to happen is that everybody consolidates around a standard, and that standard is Rezolve, because today nobody is doing what we're doing. There is nothing that a merchant can use to make this thing happen. What the examples you saw in the video. So we're going forward saying this is going to be a standard. And of course, if we're successful with that, then we will take a clip of every single transaction on the planet. Now, right now, our business model is that we take a small amount of money to activate a geolocation or to activate an image, to make it Rezolve enabled. We call it Rezolve enabled. And that costs for a geozone, it's like a couple of bucks a day. So a small business can put a geozone over a nearby office block and talk to the people in that office building at noon to say, hey, why don't you come for lunch to my restaurant, which is 2 blocks down the road, right? They can't do that today. They can't make those offers to a small community of proximity-based consumers and encourage them at a certain time of the day to come to their store. So we provide those kind of technologies. And the idea that we can bring that traffic to consumers, to merchants rather, is very compelling to them. So they're very happy to pay a few dollars a day for the zone, and they're also very happy to pay a small transaction fee, which is 1% of transaction value, or 40 cents if it's like booking an appointment or asking for a brochure or signing up for a loyalty program. Okay, so we make a small clip on the transaction and a small amount of money on the engagement, but those small amounts of money match up, grow quite big, as I mentioned before, 66 million last year, 219 million this year. And that kind of growth and momentum is only set to continue into the outer years.
Excellent. So last question I have for you, is there anything investors should be watching on the roadmap moving forward for the rest of 2022?
Yes. So, the numbers that I just talked about are based on the existing deals that we have in the market. And those deals are in Asia and in Europe and in India, right? In Asia, Europe, and India. And we're about to make some announcements in North America in the lead up to our DSPAC. And those partners who are bringing us to market, right, they're going to introduce our technology to all of the merchants that they do processing for and that they work with. And encourage them to use it. And it's, really, as I said, it's quite easy for a merchant to take it on, and it adds a lot of value. That is not included in our numbers. So when those deals are announced, they're going to be additive to our numbers. And so we think that, there's a very bright future for Rezolve, and we think that it's very exciting. We're excited about listing on NASDAQ in the next few months. I think I should just mention, we are reversing into AACI. And we will become Zone, Z-O-N-E, and the valuation pre-money was 1.8 billion, which is a much lower valuation than would be expected for a company growing this fast with this kind of revenue. And because I ran a NASDAQ company 30 years ago when I was a younger guy, I understand, that it's important to have investors join you in the journey, right? I mean, I want investors to come in at the listing and to ride the stock up, instead of what has happened, I think, with some SPACs, is coming at the highest possible price and letting the stock drift away. That's not in anyone's interest in the long term, and we're approaching it in a very sort of sensible and commercial way.
Excellent. You guys heard it here from the CEO of Rezolve, Dan Wagner. Also, this is merging with Armada's acquisition Corp, the merging partner. The ticker right now is AACI, but I have to give you the thoughts. That's an interesting ticker. I like it. Z-O-N-E. Look out for that change on over, and we'll have you back. Thank you, Dan, for joining us.
Thanks so much. Thank you very much.
All right, let's go ahead. Let's keep it going here, right here on Stock Market Movers. Looks like we got a lot of people joining us. We've gone over the FOMC meeting, the Swiss interest rate hike rate, the Bank of England raising those rates. We took a look at Bitcoin. Now we just took a look at Rezolve, and that's why we had the CEO of Dan Wagner. Now let's keep it going here. Next topics on up. So next topics we're going to get into are going to be the house market issues. And then also we could take a look at Revlon, Spotify, some travel stocks that are down. And don't forget, guys, we will be getting into another interview in just about 11 minutes here. That's going to be with Eric Schiffer, the CEO of Los Angeles-based private equity firm, the Patriarch Organization. Excited to get into that. We'll talk a little bit more about some macro look on there. Let's dive into the housing market issues right now. And I mean, there's a lot of issues going on out here right now with housing. And we got to keep an eye out to see what goes on in the next couple of days. But at least from the stats that we're getting right now, and I'm going to go ahead and bring those stats to you guys. We need to keep on watch this housing market. Looks like I lost my numbers there. Just give me one quick second. I'll get them from Benzinga Pro here. But like always, one of the things that we need to keep on watch is the housing market and how do we really see the interest rates affect as we see companies like Redfin, Compass really warning us about the kind of changes that they're seeing. They're letting us know. And so I'm trying to go ahead and pull this on up here. Looks like mortgage hit 6.3. The real cost of a house has officially spiked 50% over the last 6 months. If you look at the 30-year mortgage rates, they're spiking like none other. And why does this really matter? I think it's really important to make sure that we're taking a deeper look into how the interest rates are going to continue to affect people that went out and got, let's say, a variable rate. And it doesn't show up on the first month, right? Like if your pricing power doesn't just go away immediately. As a consumer, you probably have been seeing your mortgage go up, but really in the last 2 months. So it takes a little bit of a while to really start seeing that issue when you're just handing out the money, right? Like we can maybe pay a little extra this first month, pay a little extra the second month, but after the 4th, the 5th, the 6th, the 7th, if we just continue to spit out more, how much can the consumer hold there and where the market will really hit demand destruction? That's what we're keeping on watch right now. Let me go ahead and pull up those numbers here. I don't know why I got deleted there, but it's how it happens. You know, getting ready for the show, guys. Just got to make sure I find it for you guys here. I'll go ahead and I'll pull it up here. So the housing issue also that has me concerned is a lot of these people purchase houses at what? At a time when we were rocketing in the prices. And I think that's very important. Here you guys have it. Housing starts dropped 14% in May, topping a 2.6 decline. And that was expected by the economists. So you can see how quickly we are just falling off the table there. And another thing mentioned is the supply of houses, also the starts of houses, just not even getting up there. So you can't sell what you don't start, right? And I mean, we're going to continue to see how, let's say, if you bought a house that was worth $400,000 because, you know, houses went up and it was probably only really worth $200,000 2 years ago, how will those people be able to hold when they get above water, when the value of their home is actually lower than what they purchased it? This was my concern going into this time. And I tried to stay away from buying a home. I tried to stay away from buying a home in this time because of this. I was worried that I was going to get into a home. It was going to be valued at, let's say, $450,000. But then the market just gets drilled down. Next thing you know, I'm stuck with this house because if I sell it, I'd actually lose money on the name. And so that's not the idea of real estate. The idea is for you to be able to sell it and make money, right? Get some equity. That's why people go into houses in the first place a lot of the times. So, and normally it's to save money, but if the interest rates keep going up, there's not going to be much saving. And another thing to mention is rent. Rent just keeps going on up, and that's also sticky. And so we're going to start seeing a kind of a mess here in housing really soon. I think it's going to take a little bit, but something to keep on your radar. Welcome back to 2008. It's very similar, but the only thing that I think I'm going to hang my hat on here is that the banks didn't go crazy this time and didn't give houses to people that weren't in that financial stance to really get a house. This is what we're going to hang our hats on, that they didn't do this, but we all know how that happened in 2008. All right, let's go ahead. Check out the reports on housing live later today on YouTube. It has a quantitative chart list. I'll check it out, MD. Thank you for bringing that in here. All right, let's keep going. Let's go into the next topic here. We're going to get out of the housing. Let's talk a little bit about Revlon and what you saw. So Revlon is stepping on in here, and you are seeing bankruptcy worries come on in here. And this has a lot to do with what you're going to start seeing, which is some cash issues, right? And so Revlon filed Chapter 11 bankruptcy to kind of adjust their system. What they want to do is kind of, re-evaluate the way that they're going to go ahead, and they're going to try to come back. And that's why you saw the stock kind of boosting on up. You could see it today. It actually is making a move on up today still. It's up there 4.45. But this is where the concern really comes on in. This actually just, you can see the spike. Like there's even halts going on right now. And you got to be careful. Trading these while they're going into bankruptcy is definitely dangerous to kind of keep on watch. But one thing that we're going to keep on watch is not only Revlon here getting bankruptcy, is pay attention to see more bankruptcies, right? We already heard ELMS, a SPAC, an EV SPAC, go into that situation. There's going to be more here. There could be hundreds that go bankrupt. We know in the dot-com era, in that boom and bust time, there was a lot of companies that ended up never coming back. And so this is the point where you need to understand what is the risk that your guys are taking in some of these stocks. If it's to zero, so be it. That's always up to you to determine that. But like always, be careful with other bankruptcy stories that are on out there. All right, let's keep it going here. In a second, we'll be getting into our interviews in about 4 minutes here. Let's go ahead. Let's talk a little bit about Spotify. I want to talk a little bit about Spotify here. Let me go ahead and pull up the news here. Got so much to talk about. You guys see it. It definitely comes up and down. I'll just pull it up on the chart here on Benzinga Pro. Let's pull up Spotify here. And you guys can see here, I'm going to go ahead up and pull it up. It was this morning. And so this morning we started seeing what this right here. Spotify slows down on hiring amid macro uncertainties. So Spotify slowed down their hiring by 25% as reported by a company-wide email from CEO Daniel Ek. How he added the company would continue to still hire and grow, but we are going to slow down that pace and be a bit more prudent with the absolute level of new hires over the next few quarters. I think this is important because you're going to see kind of multiple mentions of this start showing up and roaring its ugly head. We don't want to be seeing kind of laying offs. We have seen that from plenty of companies. Just the other week, right? Tesla talking about salary 10% employees getting laid off. This is what's going to go ahead and bring that rate that we talked about in the Fed up towards that 4.1. The question is, do we start seeing a kind of a snowball effect here from these mentions? And you're starting to see it, just like I think you're going to start seeing a snowball effect from bankruptcy mentions. And so we need to kind of keep this on our radar. All right, that's going to do it for Spotify here. Let's go ahead. Any other topic that we're going to touch right now? We could touch a little bit of the travel stocks. Let's take a quick look about the travel stocks before we get into our interview. The way we're going to do that is we'll start taking a look at some of these travel stocks today. And you can see they're just continuing on just getting hit hard here. American Airlines down about 8.64% today. And overall, this has been just getting hit hard. Take a look at this daily chart. Look how hard you've been just falling fast there. Couldn't hold to the 13. Now down towards 12.16. Are we going to the pandemic low? It's kind of looking like we're heading there. That's going to be first stop around $10, then down there towards 8.50s. We could be heading down there in American Airlines today. Well, not today, but heading down there in the next couple of weeks as we've seen the travel trade just completely fall off. Look at DAL down 7.29. I mean, look at Hilton. Hilton down now 4.2% here. Marriott down 4.6%. Definitely seeing, I think, at least in my eyes, demand destruction coming into travel. I know a lot of people are saying that the consumer is still strong. But that's not what these stocks are showing me. These stocks are showing me something else right now. They're showing me that there could be a heavy turnaround in that consumer demand. You're seeing Carnival down here towards 887, down 9.9%. RCL down 10.4%. These travel stocks are just getting beat down. Airbnb down there about 7.5%. Couldn't hold on to the 100. This was a stock that was just a few while ago $200 and has gotten that 50% retracement, we'll call it. But definitely it's down there and could keep bleeding out here. But even stocks like Lyft, look how you're seeing Lyft come down. Even a consumer stock like Lyft that you probably would see it be able to be at least reluctant to all kind of the negative travel out there. We still use kind of these services just to get around, and you're not seeing that strength there. Look at Uber heading down there towards the 20. A lot of weakness in the travel stocks. If you guys can find a travel stock that looks good right now, that'd be interesting. Look at Expedia. Look how you've seen Expedia just completely, it bounced for a second there, but just getting wiped and pushed down hard here. That's not what we want to see. Definitely not what we want to see, especially in the travel industry. It's looking tough, and there's looking like there's going to be some tough months ahead. Yes, maybe we're seeing some summer vacations being put on out there, but I think it's going to be really tough going into that Santa time, and we'll see what happens in the winter months. But that's enough for me. I'm going to stop giving my opinions. Now let's go towards the expert opinion, because that's really what this show's about. You guys will get opinions from me. I'll be looking at what was hot, what was not, and any headline that I feel was moving the markets. But like always, we want to go ahead and get towards the experts. So coming up next, we got Eric Schiffer, CEO of Los Angeles-based private equity firm, the Patriarch Organization. Let's go ahead and dive right into that with Eric right after this short trailer.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protective connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, let's go ahead. Let's bring on Eric. Now, I'll do us both a favor. Looks like I tried to get it right here. How's it pronounced? Oh, I don't hear you. Let's make sure that we get our audio fixed. Let's look at the setting bar down below. You'll see a wheel, and just make sure that you go into audio, and there you should see your settings. Make sure that they're set on up perfectly there. I'll throw you in the background so you don't feel like we're watching you. Do you give me a thumbs up when you think you're ready? All right, we're going to dive on into some macro conversations. I'm bringing Eric back. Do we got you?
Yes, you got me. Can you hear me now?
Perfect.
Yeah, so it's Schiffer,
I got you.
by the way, Eric Schiffer.
Schiffer.
Yes.
All right, Eric Schiffer. There you go. I don't want to mess that up. I want to make sure I get that right. I'm glad to have you on my show, the first time on here. I'm excited to go ahead and dive into some macro conversations. I'll try to touch a little bit of everything and get your opinions today. So let's go ahead. Let's dive right into it, Eric. First thing, I want to know a little bit more about Patriarch Organization and what you do there as the CEO.
Yeah, well, look, I'm an entrepreneur. I also manage, my private equity firm here in Los Angeles, and interested in many different areas. And we're invested in technology, big into energy right now, certainly materials, and some emerging market opportunities, which including some of the Chinese technology firms that have done exceptionally well against the NASDAQ's records, especially over the last month and a half.
All right. Now, we recently just got that 75 basis point from the Fed here. Now, do you think this hike was enough, or is the Fed still kind of like behind the ball here?
I think that Well, that's a good question. I think if you're talking about inflation, the challenge that the Fed has, as we know, is how do they balance this kind of challenge of not running the plane into the mountain of recession. And I think there are a lot of real concerns about that. It's a balancing act of what they're going to have to do. I expect they'll continue, but I don't think they can continue much longer. And so I would imagine that by the end of Q3, you're going to see a softening, and that'll be a signal to the markets to begin to move up. And so in the meantime, it's going to get rough. And so for investors that haven't been through it, there's going to be a period of time where you're going to see financial assets continue to take it on the chin and feel somewhat catastrophic in terms of what the experience is like. But I do think it'll be a shorter experience, and there'll come a time where they will back off, and you'll see a very interesting run at that point.
Yeah, so I'm guessing you're probably not in the camp of seeing the Fed's benchmark year ending at 3.4.
I think that the probabilities of that happening there's a better chance of UFOs landing on the White House lawn than that occurring, in my opinion.
Hey, let's keep it going here. That's what it's about. That's what this show's really on about. Let's keep going towards the next question here. We can dive a little bit more into inflation. And do you see the continued rise in inflation when it comes to food and energy going into winter?
I think inflation is going to be mitigated to some degree, but I don't think that there's going to be a fix for energy in the short run. There's been policy issues and policy challenges that have stopped that from occurring. And because of that, you could see oil in the 150 range. You could see natural gas continue to go up given the war in Ukraine. And those are forces that are not good for inflation. So I think we're going to be in a period of inflation for some time, perhaps not as great as it was, and what we'll experience and what we have experienced over the last few months, and what we'll likely see over the next few months as well. And that's why assets, for instance, commodities, I think will do well. I think you're going to see silver and gold do well during that time period. I think you'll see other commodities equally benefit from it.
So it looks like you're in the camp of that the commodity trade is not completely off. We might be seeing a correction right now, and then we should see another rise on up. Is there any kind of timing that you should be looking at? Anything that we should be kind of keeping our eyes out to really when this commodity rise can come back into play?
Yeah, well, I think commodity rises, especially some of the metals and others, when the Fed gives a signal. Because that's clear to investors that this is a way to hedge against inflation, and so I think the reason that the pressure is occurring right now in the space is largely from the fact that the Fed is continuing to put pressure, and investors are liquidating in general, but it's a short-term correction, and I think the longer term over the next year or 2 or 3 is very bullish for commodities.
Definitely. Let's go into that ugly R word that everybody's talking about. And 1, do you see recession coming? And 2, where do you see the markets in, let's say, 6 months from now at the end of the year?
I think the markets over the next 2-3 months you could see a reduction, a further drop of anywhere from 10 to 20%. And then I think you're going to see a run. And so we could end toward the end of the year, given easing that may occur, close to 441, 42, but drop down as low as in the 31, 32 side on the S&P before that happens.
All right. Now, one of the things that I've been looking for is we talked about the commodity. We talked about a little bit about oil. Well, how do you feel about the tech sec? And, it's definitely been beaten down now. I mean,
Yeah,
definitely deep into bear territory. How are
yeah.
you feeling about some of these tech names? You don't have to give specifics on the name, but how are you feeling in the industry overall?
Well, I think the industry, because of the discount rates effect on tech valuation, is taking it on the chin, and tech is not favored in these times. And so, you're going to see, as the Fed continues to put pressure, a further reduction in PEs for tech companies, especially tech companies that were darlings, and but that will abate a bit certainly the Fed eases. I just don't think tech, relatively speaking, in a stagflationary environment, is going to do as well as commodities and others. And if you look back in the stats in the 70s and even the early 80s, when we had similar kind of parallel analog situations, that was the case. So that's not to say that if during a rally, when they begin to soften, it's not a good place. I think you could do really well in the short run.
Eric, I don't know your background or how long you've been trading, but I don't know if you traded through the dot-com era and the 2008. My guess would be yes, but my thinking on that is, what would you compare this market to more of, that dot-com kind of bust area or kind
Yeah.
of more the 2008?
It's a really good question, and I did have traded through both. I didn't trade through the 70s, and I think that would have been illegal probably. But I think that there's a combination. I would layer two areas. I would layer 2000 against the probably 70, kind of early 70s, and you could argue even 80, 81 period. So it's sort of a trifecta of those three. And, you had in the 2000s, you had tremendous valuation excess. And you also had forces that were at play that were not dissimilar. But I think we're closer to the 70s than anything, in my opinion.
Yeah, definitely those times of heavy inflations that I didn't live to. I can kind of see why people ended up being a little bit of that tree hugger type, because I mean, this whole inflation game isn't fun, I don't think, for anybody to kind of be in. But
it's a tough time for people, and but I think that we will work through it, and investors will work through it. And I think investors that have a long-term kind of outlook and stay focused on companies that have fundamentals and sectors that make sense because they're kicking out a lot of cash and they've got more cash to kick out, or sectors that are hedges against inflation, are going to do fine.
all right, last question I'll give to you is, because I'm pretty sure you have more insight than I do. How do you see capital in the private equity side right now? Is it drying up? Do we see it come back? How do you see it?
I think capital on the private equity side is being hurt, and will be tight for some time. And I think that the valuations that many private equity firms have put on some of their portfolio companies have been following kind of the public markets. So you're going to see a lot more kind of short-term constriction in valuations and books being written down. But I think there's still a lot of opportunities in private equity for sure. But we're much more involved in the public markets than anything today.
Excellent. Now, last thing I'll do is, Eric, where can my audience find you more of, or learn a little bit more about
Twitter.
the Patriarch Organization?
Well, they can follow me on Twitter.
Hit it on up there, definitely. What's the tag, just to make sure?
Just my name, @Eric Schiffer.
Perfect. I just want to make sure that you guys find it. I'll also make sure it's in the description below. So please give our guests a follow, and we'll definitely have you back, Eric. I enjoyed your conversation on both sides, and we touched a lot here in the macro. I know the chat was loving it too. They said literally this was exactly the words. This guy is awesome.
Thank you. Well, I appreciate that. And look, I think you're doing a great service, and you're helping to give people an opportunity to kind of get educated in real time and be part of a community. And you know, for investors out there that are continuing to learn, it's all about knowledge. You know, so keep growing your knowledge, keep growing your knowledge in a lot of areas. I study across the board, from biology to economics to nanotechnology. So keep growing the brain, and it will make you a wiser investor. And then the last thing I would leave with is the importance of thinking rational. I learned this from studying Charlie Munger, and that also can help you become a good investor as well.
Definitely.
These
Definitely
are good forces to stay focused on. So
yeah, the one thing you don't want to be battling as an investor is battling yourself. So I think that has a lot
well,
to
we
do
all
with
have biases, and we have
Yeah.
to be aware of them. And the more you kind of prioritize the thinking rational, the easier that kind of ability to become a better thinker kind of permeates through all of the things that you do. So
Thank you, like always, and throwing a little bit of extra nuggets on out there for us. So we'll take the gold, and we'll keep watch also how gold is in the next coming months. Thank you, Eric.
Gold's a good move over the next few months for sure.
Hey, there
Especially
you
when
go.
they ease.
Hey, appreciate it. Thank you for
Thank you.
coming on
Yeah, take
today,
care.
and we'll definitely have you back on, Eric. All right, guys, that's going to do it for us there. That's 2 p.m. Can you imagine it, guys? I feel like this show is really, and I'm trying to make it, guys, bang, 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 to keep the informational edge that you guys need. That's what I'm trying to do. Get you to the headlines, get you to some experts so that you guys can get a round of information, then go ahead out there and make your own investment decisions. So if you guys enjoyed the show, please let me know after. Hit the comments. Let me know how you guys want to see me improve the show. Do you guys want the interviews longer? Do you guys want us focusing more on the intraday action? Let me know, because it's all about you guys here on Stock Market Movers with, of course, Money Mitch. I'll see you guys next time. Hit the like button on the way out. Up next, you guys got the 10 NFTs to buy in a bear market by none other than the roadmap. My man, Chris Ketchy, will be on next. So go ahead and check him on out, and I'll see you guys next time.